Hey guys, Gary Gensler has all but killed the US crypto market. Coinbase may soon leave the States, and the largest market maker has already left the US due to SEC pressure. I decided to add the Bitboy video about why Gensler is the #1 enemy of the crypto market, how the SEC is destroying crypto, and why the US market may soon become unfit for crypto trading. Let's figure out everything together. Gary Gensler is enemy #1 for the entire crypto market. In his video, Bitboy showed how the head of the SEC failed to properly answer a single question at a congressional hearing 3 weeks ago, despite the fact that Gensler taught blockchain at MIT before his SEC post. And now he's turned from crypto angel to evil Lucifer and considers all cryptocurrencies to be securities and calls for strict regulation of markets. Guys, I know the congressional hearing with Gensler was 3 weeks ago and seems no longer relevant, but it isn't so. The fact is that the consequences of Gary Gensler's action are slowly starting to show, and it could completely destroy the crypto market in the US. Therefore, it is very important to understand what is happening with crypto companies in the US and what this threatens to ordinary investors in the States and beyond. Bitboy showed how Gensler got a roasting in Congress, and I will now specifically talk about why it was a well-deserved roasting and why Gensler is the dragon that is keeping the crypto market from good life. It all started on January 12 when the SEC accused Genesis and Gemini of unregistered sales of valuable assets. Just 1 week later, Nexo Capital has agreed to pay $45 million in penalties to settle charges from the SEC and state regulators that the crypto firm failed to register its crypto asset lending product. Already on January 9, the SEC killed another staking platform. Kraken shut down its staking service for U.S. residents and paid a $30 million fine. The SEC's characterization of Kraken's staking setup highlighted the risks investors take on when staking their tokens, with staking-as-a-service providers which give them very little protection. Instead of regulating the platforms, Gensler decided to just destroy them, a very democratic approach. On February 22nd, the SEC objected to U.S. Binance's move to acquire over $1 billion of assets belonging to the defunct cryptocurrency lending firm Voyager Digital. Gensler and the company argued that the move might violate some securities laws, and what laws, of course, the SEC didn't specify. You think that's it? This is just the beginning, my friends. But first, I want to let you know that the market situation is changing very fast. So we have launched a CoinPost Twitter account where we break down all the events of the crypto market in real time. Subscribe right now. A month later, the Securities and Exchange Commission announced charges against crypto asset entrepreneur Justin Sun and 3 of his wholly owned companies, Tron Foundation, BitTorrent, and Rainberry, for the unregistered offer and sale of crypto asset securities. So he wouldn't be bored, I attributed the price manipulation of TRX to him. Well, I agree with the SEC because Justin Sun is a sly fox. On the same day, Coinbase said it received a notice indicating that the SEC had identified possible violations of securities law. As Coinbase itself writes, "We asked the SEC for reasonable crypto rules for Americans. We got legal threats instead." The SEC has focused on the Coinbase Earn product, but Gensler hasn't gotten his hands on it yet. Gary Gensler has been in office at the SEC since April 2021. Under his leadership, 2 of the largest scams on the crypto market occurred: Terra Luna and FTX. Investors lost about $70 billion in total. That's just on the crypto market. If we look at what's going on in the banking sector, it's even worse. The 3 largest banks with hundreds of billions of dollars in assets have burst in the last 2 months. And all the while, Gensler has been on the SEC chairman hunt for cryptocurrency staking platforms. So far, we've only broken down Gary Gensler's actions. And in the second part of the video, we're looking at the consequences that will affect every altcoin investor. Major exchanges are leaving the U.S. market. The ancient crypto exchange Bittrex filed for Chapter 11 bankruptcy following an accusation by the SEC. Interestingly, only the U.S. division of Bittrex closed, while the main Bittrex Global continues to operate as usual. Such a way to escape the U.S. market from the pesky Gary Gensler. Another larger exchange could follow the example of Bittrex, although so far this is only a rumor. Coinbase announced the launch of Coinbase International Exchange to expand into other markets. But most likely, Coinbase has decided to reassure itself and open a division outside the US in an offshore area where the SEC will not interfere with doing business. Dubai could be a strategic hub for Coinbase to expand internationally. Coinbase CEO Brian Armstrong sees Dubai as a great place to grow the blockchain industry, highlighting the transparency of regulations for crypto companies. Unlike the US, where Gary Gensler protects you today and shoots you in the back tomorrow. This is another example of cryptocurrency's focus shifting to crypto-friendly markets. On April 18, Brian Armstrong considered leaving the US market in the event of problems from the SEC. He said, "I think in a number of years, if we don't see that the regulatory clarity emerge in the US, we may have to consider investing more elsewhere in the world." It's been almost a month and Coinbase is still in the US, but with this SEC policy, it won't last forever. Unfortunately, this is not the worst news. Next, let's touch on one event that could kill the altcoin market in the US. On May 9, the two largest market makers, Jane Street and Jump Crypto, were going to leave the US market due to extreme regulatory crackdown, lack of regulatory clarity, and heightened scrutiny. Perhaps not everyone fully understands what problems this can lead to, so I will explain. A market maker is a trader or a firm that actively provides liquidity to a market by placing both buy and sell orders for a particular cryptocurrency. In other words, market makers help to ensure that there is always a buyer or a seller for a given cryptocurrency by placing buy and sell orders on both sides of the market. By doing so, they help to reduce price volatility and ensure that the market operates smoothly. Basically, a market maker helps an asset trade moderately, without the very sharp ups and downs that have been seen in the market in the case of shitcoins. Without big market makers, the US market would be more volatile and have bigger spreads, just like the shitcoin market. What's also important is that some altcoins may suffer because of the lack of a market maker. The tokens in the Jump Crypto portfolio are the tokens that are supported by this market maker. If Jump Crypto leaves the US market, assets such as Aptos and Sui and others will be left unsupported and could drop significantly. Even now, the volumes of Binance US are down 70% per day, whereas on other exchanges, only 20 to 30%. The departure of major market makers is already affecting crypto assets in the US, and the situation can only get worse. So stay tuned and subscribe to the channel. Thanks for watching your Coin Post.